Today we are covering the 5 renewability provisions in health insurance, a critical topic for the National Insurance Licensing Exam. The exam will test your precise understanding of the differences between these provisions, focusing on who has the power to cancel the policy and who has the power to change the premium. Let's start with the best possible provision for you, the policyholder. This is the non-cancelable provision. With a non-cancelable policy, the insurance company cannot cancel your coverage for any reason other than non-payment of premiums, and they absolutely cannot raise your premium. Everything is locked in, usually until you turn 65. The exam might present a scenario where an insured's health declines and ask if the insurer can raise rates on their non-cancelable policy. The answer is always no. Next down the ladder is Guaranteed Renewable. This provision is a huge exam topic, like non-cancelable. The insurer cannot cancel your policy. They must renew it as long as you pay the premiums. However, and this is the key difference the exam will test you on, the insurer can raise the premium. A common exam trap is to ask if the insurer can raise the premium for just one person because they got sick. They cannot. With a guaranteed renewable policy, the insurer can only raise premiums for an entire class of policyholders, not on an individual basis. For example, they could raise rates for all 45-year-old males in a specific state. Then we have conditionally renewable policies. With this provision, the insurance company can choose not to renew your policy, but only for reasons specified in the policy itself. These reasons cannot be related to your health. An exam question might list scenarios for non-renewal. For instance, the insurer could refuse to renew if the insured changes to a more hazardous occupation, a condition listed in the policy. They cannot, however, refuse renewal just because the insured filed several claims. Fourth is the optionally renewable provision. This gives the insurer the most flexibility out of the renewable options. On the policy's anniversary or premium due date, the company can simply decide not to renew your coverage. They don't need a specific reason, but they can't cancel you mid-term. The exam loves to contrast this with conditionally renewable. Remember, conditionally requires a specific reason stated in the policy, while optionally does not. Finally, there is the non-renewable or cancelable provision. This offers the least security. The insurer can cancel the policy at any time with proper written notice. This provision is rare for health insurance, but might be tested. The key takeaway is the insurer has the full right to cancel. To keep these straight for the exam, remember this mnemonic phrase. No good can occur. This in insurance, guaranteed renewable, conditionally renewable, optionally renewable, and non-renewable, ranking them from the most secure and expensive for the insured to the least secure and least expensive. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com. Significant content and free content in the template. If you need more practice questions or more free practice questions, visit openexamprep.com and send an online order.